Hi guys, I'm Bon here. I hope you guys are doing well. If you guys have not been doing well, check out this baby video.
What do you want to do now? What's the getting now? What's wrong? What do you want
Alright, enough of that. Today, I'm going to share with you exactly how I'm going to invest in the upcoming 2020 financial crisis. I'm going to share with you what stocks I'm going to buy and when I'm going to buy it. And I hope to share with you guys that investing isn't tough, okay? All you need to do is just start. And you should definitely start right now if you can. Just like my other videos, I need to say that you should not be investing unless you have at least 3 to 6 months of emergency funds. All right, that is so important. If you don't, then you should not be investing. All right, and so the biggest problem that most people have while investing in a financial crisis is knowing when the market will bottom out. Most people want to get in the market at the lowest point possible, and it's very understandable because that is the best place to invest your money in a financial crisis, because everything after that is just straight up profit. So how do you know when the market is going to bottom out? Well, let's compare it to the 2008 financial crisis. So in 2008, the financial crisis started around September 8th, 2008. Okay? And then it lasted for around a month till around October 6th to around October 13th. That was the initial big drop that we saw. It went from $126 trading to $88.50. And so that is a $38 difference. That's a 33% drop. And then at the end of 6 months, it started going up again. And then, as you know, we've had the biggest bull market since 2009. All right, and so now let's look at the financial crisis of 2020. As you can see here, the financial crisis started around February 17th, 2020. And since then, it has been a horrible roller coaster down. Okay. Right now, it is currently March 20th, and we are down 36%. It came from $330 down to $228. 33% drop. So 33% drop within a month. So judging from what happened in 2008, it is likely that we will follow the same trend. Do I think it's going to get better anytime soon? No, I don't think it's going to get better anytime soon. Personally, I think it's going to get a little bit worse before it gets better. However, since I don't know if the stock market's going to go up or down, I'm going to put my bets in increments. So based on the 2008 financial crisis, the stock market kind of leveled out after a month's worth of downward trading. So right now is about a month after the stock market started dropping. And I wish I could tell you that you should definitely go in now because the market has bottomed out and everything else is just going up. But I can't tell you that because I can't just say that based on the last financial crisis, this financial crisis is going to be exactly the same. No, every financial crisis is different. And this one especially is based on the coronavirus, which is affecting all of America and the world. So taking into consideration of what's going on in the news, I'm going to do something that Warren Buffett recommends, and that is dollar cost averaging in an index fund. Dollar cost averaging? What is that, you say? Well, the concept of dollar cost averaging is that you put a certain amount of money every week or every month over a long period of time, say 20 or 30 years, and supposedly that money will go up despite any ups or downs of the market. And this type of investment is for the long-term investor. This type of investing goes on for years and years and years. But since we are in a financial crisis, it would be such a waste if you just put the same amount of money that you have over the last 3-4 years. What you should do is front load your account and put a lot of money in there when the market is down like it is right now, and then wait till it grows a year later, because you're going to make a lot more money if you invest your money in the stock market now when it's really low, as opposed to a year later when everything has pretty much recovered. Now again, I just want to remind you that you should not be investing anything that you cannot afford to lose. Okay? Make sure you have 3 to 6 months of income. Also, what's even more important is you hit the like button for the YouTube algorithm. But anyways, taking on. So how does dollar cost averaging work during a financial crisis? Well, I'm going to show you exactly how it works. So most people, what they do is that they take around 70 or 80% of their savings and they throw that money into the stock market all at one time. Now, if they do that, there are two things that can happen. One is that they got in the very bottom of the market and they are just head over heels and loaded with money. Now, that is very, very lucky. I'd say that only 1% of the population can do that, or even less, and it's just based on luck. The other thing that can happen is that the market could go down the next day or the next week, and they are freaking out because they have no idea when the market's going to go up. And the truth is, nobody in the world can tell you exactly when the market's going to bottom out. Except me, of course, because I know everything. No, but seriously, nobody in the world can tell you when the market is going to bottom out. So what you should do is you should diversify your investments as much as possible. And then you might say to me, yeah, of course I diversify. I'm not going to put my money all in one stock. Yes, that is true that you shouldn't put all your money in one stock. But another form of diversification is that you spread the money that you put out over a period of time so that you don't get hit hard with the really bad drops. Yeah, and so for me, first off, I've decided how much I want to invest during this financial crisis. Secondly, I've decided how long I want to spread out that investment for. So for this crisis, I want to spread it out over 5 months. The reason why I decided 5 months is because from the previous financial crisis, that lasted from September 2008 into March 2009. That gave a window of 6 months. We are 1 month into this financial crisis, so we have around 5 months left. That is how long that I think it's going to last. Plus, it also lines up with some of the news that I've read. Now, for me, I like to invest every week because it just spreads out my odds a lot better. So if I'm going to spread my investments out through 5 months, 5 months times 4 weeks per month is 20 weeks. That means that I will be making around a 5% investment every week for the next 20 weeks. So let's give it an example. Let's say that I have $1,000 to invest. If I'm going to divide $1,000 into the next 20 weeks, that means that every week I'm going to invest $50. Just make sure that you are evenly spread out and you are not missing some of the bottom lows of the stock market crash. And this is exactly what I advise you guys to do. Have a set amount of money that you guys want to invest during this time, right? Because if you put more money in during a stock market crash, you'll get a lot more return than if it was in a stock market crash. And then number 2 is determine how long you want to spread it out for. For me, it's 5 months, but for you, it might be different. One thing that I like to do for myself that is a little bit different is that I like to give myself room to increase or decrease the amount of money that I invest every week. And this amount is set between 5 and 10%. Usually, I don't do this. I just put a set amount of money every week into an investment and it automatically invests by itself. But this time it's different because we don't get a stock market crash every year. So I am heavily following the news and making sure that I capture as much as I can if I know that the stock market is going down or going up. But I always make sure that I give myself a cap because I don't want to put everything into the stock market and then have it fall down the next week and feel absolutely miserable. So my cap is between 5 and 10%. If I think that the economy is improving faster than I thought, I would increase from 5% to 7% or even to 10%. No more than 10%. Okay, now that I show you how I'm going to invest my money, let's show you what I'm going to invest my money into. Okay, here's a list of stocks that I'm going to be investing in the upcoming weeks and months. So the first stock that I'm going to put money in is the U.S. total stock market. And the ticker number is VTI, right? And I'm going to put 40% of my investments in there. This is because I believe that the U.S. market is going to go up again, so I like to invest in the U.S. market. And the next stock that I'm going to invest in is the International Developed Market stock. Ticker number is VEA, and I'm going to put 25% of my total contribution into that. Although the U.S. is the leading market out there, other countries are developing really fast, and it would be a shame if I miss out on the international market. Then I'm going to invest 15% on the International Emerging Market stocks, which is ticker number VWO. I think that emerging markets have the best potential to really make a big impact. So those 3 stocks make up 80% of my portfolio. Then I have 3 other stocks, which is U.S. value stocks, large cap, mid cap, and small cap, which is VTV, VOE, and VBR. At the percentage of 8% for the large cap, 7% for the mid cap, and 5% for the small cap. Those three stocks are just a little bit more diversification for me so that I can capture growth if something happens in the large corporations, mid corporations, or small companies. So the reason why I'm putting my money into these stocks is because these stocks track the overall growth of all companies in America. Some of those stocks actually track companies overseas. So I want to diversify myself as much as possible. I know that this isn't the best strategy to get the most return out of a stock market crash. The truth is I don't have time to research every company out there and see how they're doing and see how they are affected by this crisis. All I know is that the United States and the world is going to get out of this financial situation. And when they do, I'm going to gain money. And that is all I care about. Warren Buffett said, the first rule of investment is don't lose money. The second rule of investment is look back at rule number 1. So I know that this way allows me to diversify myself completely in terms of investment time and in terms of the companies that I choose. Well, that is all that I have for you guys today. Thank you so much for watching. If you guys like it, please give it a thumbs up. If you found it helpful, please leave it in the comments below. I love reading those things. Alright, so until next time guys, stay safe, stay healthy. I'll see you later.